Good to have you with us. Happy New Year. You've heard what Lynn was talking about in China. Some optimism creeping back into the Chinese market. Things may have bottomed out. A lot of hopes for the PBOC to do more in terms of rate cutting. What are the chances that we could see a Chinese equity market rally this year?
Happy New Year. Well, China equity performance has been disappointing, not just for the past year, but actually for the past 3 years, right? But if you look at the economy, the recovery from the COVID reopening has been somewhat bumpy. And this year we are anticipating growth to slow from last year's 5.2% to 4.4%. But having said that, we do expect more policy measures to support growth. I think on the policy front, on the local government debt front, we have really seen quite a fair bit of measures to stem the downside risk. Then the question is actually how they can actually stimulate that confidence from private sectors, from consumers. And I think that's going to take a while. But if you look at the valuation of China equities, I think a lot of these negatives has been priced in. So I would argue for a very attractive risk reward for China equities at this juncture, and that should also help to prop up the entire Asia ex-Japan equity market as well.
Okay, so what are you buying in China? I'm assuming you're going to stay clear from the housing sector.
Well, I think housing sector, I think that's going to take quite a while to bottom out still. What we favor is really the consumer and the new economy sectors. They have actually drifted down to quite a fair bit, attractive valuation as well. And we do expect growth to start bottoming out in terms of earnings. And on top of that, I think some of the state-owned enterprises with very healthy dividend payouts, telco sector, for example, I think that is also an interesting area to look at.